Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's quickly get on board our queries for the day. They are pouring in on our social media handles as well as WhatsApp. So let me start with the first one. This one is from Sasta Money from Coimbatore, saying that I'm holding Godrej Industries for more than 3.5 years now. Holding cost is around 577.5 rupees per share, about 170 shares of Godrej Industries. Should I continue to hold or exit? Kunal, Godrej Industries, does it make sense to continue to hold on to this counter? Sasta Money has been holding it for about 3.5 years now.
Well, I would suggest to continue to hold. It's an average kind of a stock. Again, I think from the all-time high levels, the stock is still down almost 100 rupees from, I think 650 or 660 was the all-time high for Godrej Industries. That was in 2017-18, and the stock is still, going through a recovery process. But it's a very stable stock. The stock has a history of giving you good returns from the phase of 2010 to 2017-18. For example, the stock did pretty well, 200 to almost 650. So, it's a stock which should be, kept from a longer term perspective. It's getting to a recovery phase. So I'm sure that, say over the next, 6 to 9 months, if the market trend, continues for the mid-cap segment, then I believe Godrej Industries as well should come back above your cost. So I would suggest a hold as of now.
All right. Gentlemen, I just want to remind you to keep your answers as short as possible. Our viewers are reminding us that there are a lot of queries today, so we'll try and take as many as possible. Sudeep is asking about Tata Group companies, and this one's for you, Vijay. You've already mentioned Tata Power would be a buy for you perhaps, considering its valuations as compared to its peers, and you compared it with JSW Energy. But among the others, Tata Elxsi, for example, or Tata Chemicals, Tata Motors, Tata Consumer, would you suggest any others that can be bought from the perspective of 5 to 10 years?
I think that Tata Motors is now post correction looking healthy, and there was a fall due to the chip shortage, and I think that this chip shortage issue should be taken care of in the coming time. So Tata Motors is one. The other Tata company I would recommend is Tata Chemicals. I think that it is still undervalued, and it is doing a great job in the EV space, in the EV battery space. So Tata seemingly is good. The other one is Nelco. This is one of the companies which is into the development of drones, and we have seen the new aviation policy where drones are going to come in a very new way, and the government is allowing, and it is also one of the major defense requirements nowadays. So I think that Nelco is another company which I would recommend with a longer term perspective, because it is also into satellite communication. So Nelco, Tata Motors and Tata Chemicals are my choices. But again, one caveat that one should, or any investor should, buy these stocks in a correction.
Alright, this one is from Sarvani from Hyderabad. Wants to know if it makes sense to invest in Aptus Value Housing for the medium term. If not, please suggest a good stock which can give about 20% return in medium term. Vijay, good morning to you. Also, Aptus Housing, a recently listed company. Do you have any coverage on this particular counter? And if not, is there any other good stock which Sarvani can look at that will give 20% returns in medium term?
Well, I think that I have one stock which can give you even higher. So this is Indiabulls Real Estate. Now the old management has changed, and it has been taken over by Embassy and Blackstone. So we have to understand, once the name changes, it comes into the Embassy ambit. They have one of the largest land banks as of now in the country. In the residential and the real estate, in the commercial real estate space. So I think that Indiabulls Real Estate is one company which I would recommend with a longer term perspective. Again, buy in a correction. This stock can go up to even 500, so double up within 1 to 2 years. So leave 20%. I think that the stock can develop, and I see a lot of action in the real estate space in the coming few years. So Indiabulls Real Estate is my recommendation.
All right, certainly something to watch out for. Kunal, this one's for you. Purna is asking about Shriram Transport Finance, which she bought at levels of 1437. It's seen a bit of a downtick from that level. She bought it in July. She's wondering whether to switch to something like a Shriram City Union Finance.
I think both these stocks are looking quite strong to me. Yes, Shriram Transport has come back towards its 200 moving average. It's consolidating over here. So I think if you can stay put with the same stock and say over the next 2 to 3 months, I believe that there should be a strong uptick which can come across in the financial space as well. So I would suggest a hold on Shriram Transport and no urgency as such to switch from this quality stock to its other peers. So I would suggest a hold.
One is coming in. It's a combined query from S. Balasubramaniam and S. A. Darwin about Sun TV. He's bought about 2,043 shares at an average price of 524 rupees per share. Wants to know what to do. Does it make sense to stay put in Sun TV or shift to Mahindra Holidays or look at any other stocks like ITC? Kunal, all of them different sort of companies into different sectors. What should they do? Stick with Sun TV or look at Mahindra Holidays or a stock like ITC?
Well, yes, all three of them are completely different spaces, different stocks. So I believe first part that whether you need to hold Sun TV, I would recommend that you can look at maybe exiting or trimming your stake over here. And the pure reason for that is that the underperformance of the stock. I've seen the stock going towards 550, 560 levels, and every time it tries to touch to that territory, there is a huge selling pressure which comes by, and the stock is unable to break past above those levels. So purely on the fact that the stock is unable to break past above its major resistances over the last 6 to 9 months at least, I think is a point of concern for the stock. So I would suggest to try and trim your holdings or maybe look at exiting the stock over here. Compared to the other two names which you've pointed out, so Mahindra Mahindra Holidays as well as ITC, both of these stocks are quite different. Mahindra Holidays, I think, is at one point looks very attractive because of the reopening trade and the theme going by that. So you can look at investing over here. ITC for I think if you're looking to invest, I think it has to be very longer term oriented, at least with a 3-year plus kind of a time horizon, if not more. And you have to be very, very patient and not look at the screen, not look at the prices on an ongoing basis. So if you're ready for that, then I believe ITC could be a good investment.
All right, the next counter is also for you, Kunal, and this is Phenolics Cables. We've got Soumitra who is wondering whether to get into it as a positional trade, and he's asking for the technical view. As I see it, it's trading below all of its key simple moving averages.
So it was trading below its averages till yesterday, Alex, and I think if I'm not wrong, today the stock is up some 3.5%, and it's broken past above its 50-day moving average. So I believe on the short-term charts, we call this typically as a range breakout for stock prices. So I think at 510 or 512 where the stock is trading, looks to be a good short-term swing buy. Would keep a target of almost 555 to 560 for Phenolics Cables, and I think the stop loss for that you can keep it closer to that 50-day moving average. 498 499, I think, if I'm not wrong, is the 200-day moving average. So you can keep that as a stop loss on closing basis and hold on.
Okay, this query is coming from Rajat Watts. He's bought Nuvoco at 570 levels. He wants to know what should his long-term target be if he is looking to keep the stock for a year. Definitely 1 year would not exactly count as a longer term, Vijay. But Nuvoco, do you track this counter? Recently listed one. Does it make sense to hold on for the longer term for Rajat?
Well, I think that whichever new IPOs we have seen in the last few months, I think profit booking should be there, because they have come at a stretched valuation. So if you really want to get into a cement stock, get into a seasoned company. So I would recommend that a Grasim is much better than a Nuvoco Vista, and no point of being here. So just exit, book profits if you've got it at a better price, and get into a stabler company. Another company I would like to recommend here is Udaipur Cement. Now we have to understand that the management has changed. Now it is under JK Lakshmi. So Udaipur Cement, which is trading at about 40 odd, this could be the dark horse if somebody holds with a longer term perspective, because of the management change and the fundamental change in the company. So this can go up, maybe double up in the coming years. So it's a very it's a small company, but again it has a great management, and we have all seen what has happened in JK Lakshmi Cement. It has gone up tremendously. So my recommendation is get into a company which is at a cheaper valuation right now rather than a stretched valuation.
Okay, this question from Chaitanya, I don't think has an answer yet. Chaitanya, you're asking about which auto ancillary companies will benefit from the government's PLI scheme in auto. The latest update that our correspondent got is that there's going to be a revised PLI scheme that will be announced. It hasn't yet been cleared by the cabinet. So we'll circle back once we have more details, and then perhaps we can ask Vijay to give you a few companies that you can consider looking at. This next one is for you, Kunal, and it's not a stock specific question, more a tactical question. Purna is asking whether you can buy or if it is advisable to avoid stocks that are in the ASM list.
Makes sense to try and so I think it's a broader kind of a question, and what we have to look out for is when you are looking to buy stocks, you have to buy stocks which are trading on high momentum. These ASM stocks are the ones which typically see liquidity, a drop in liquidity because of all the regulatory concerns which tends to surround the stock, at least from a short-term perspective. So I would always suggest that have a mix of stocks which are more oriented towards large caps and towards a lesser proportion, a relatively lesser proportion towards mid caps and small caps. You also have to look at the backdrop of the last 15-16 months of the overall market rally, that how the small cap and mid caps have behaved and the kind of rally these stocks have shown. So I would suggest that wait for corrections into many of the stocks specific, and if you get these stocks say 30-40% cheaper than what they were maybe a month and a half out back, then it could make sense to try and look at investing into this space.
Okay, this one is from Mirza Hussain from Bangalore, saying that wants to buy the below stocks at current market price for medium term, and the stocks that he's asked about is Adani Power and Hind Copper. So he wants to know, does it make sense to invest in these stocks at current market price, and what sort of a medium term target should one look at? Kunal, either Adani Power or Hind Copper, does it make sense to invest at current market price? What sort of a target should Mirza look at?
I would suggest that if you can bifurcate and look at maybe investing both into both of these stocks, it could turn out to be a good strategy. And there's a reason for that, because Adani Power, even though the stock has corrected from 160, 165 towards at one point I think it was just sub 80 just about a couple of weeks back. So I think the stock has gone through 50% correction, come back towards the 50-day moving average. It's a very high beta stock, so you have to be ready for volatility. And if you're okay with that kind of a huge swing volatility, then I believe looking at Adani Power could actually turn out to be a good positional trade. Hindustan Copper, on the other hand, I think has done fabulously well. We've discussed how the commodity theme has played out over the last 14-15 months. Hindustan Copper has gone through a very similar kind of an uptrend. It's come back towards, correcting towards its 200-day moving average as well. So both these stocks are looking attractive. Both these stocks are completely different in terms of, the price behaviors. I would suggest that if you can bifurcate on your allocation on both of them, it could actually turn out to be a good longer term trade.
Okay, we've got an interesting question coming in from the Kunal Kaushik. That's how he calls himself on YouTube. This one's for you, though, Vijay, and you've already mentioned that you're interested in the realty space. He's specifically asking about Suntech Realty. Would you suggest that this is the best buy?
Well, I've never heard such a name, but again, interesting to know that. Suntech, although it is not one of the best buys, but yes, I would say that it is one of the good buys, and especially in Bombay Realty, where Suntech has most of its presence. Suntech has been around for over a decade now, and has been doing good work there, and they have several projects. So yes, it won't move as we can see probably moves in we have seen already in Prestige Estates or the Bangalore Realty ones. Or the even Bombay Realty, Oberoi Realty, it ran up. So it is not one of the best buys, but yes, it's a good buy. Again, I'm saying, so Suntech, if somebody buys around here, around 370, 380, it can go up to 500. But yes, it won't be a very fast mover, but yes, it's a good buy.
Okay, this one is from Lakshman Sodgam from Denmark, all the way from Denmark. He wants to know about advanced enzymes. He already holding 500 shares, which he's purchased at 425 rupees per share. He wants to know what sort of an potential upside can he look at for this particular counter in the next 2 years. Kunal, advanced enzymes, how does this counter look on the charts? If someone is to look to stay put in this counter, does it make sense, especially for Lakshman?
It makes a lot of sense to hold on. So, what has happened, Cheryl, is in the last 4 months, from being a stock which was almost at 500, 505 odd rupees to, being a stock which corrected back towards 350 levels. It's come back towards the 30%, corrective phase. I think today is where you've seen the first, price uptick for, advanced enzyme over the span of the last, so many weeks. And we typically call this as a price volume breakout. But the only catch with the stock is that there have been such similar price volume breakouts over the last 3 months where you've seen the stock moving up on a single day, but then there is no follow through price action. So I would suggest to hold on and wait for maybe another couple of days. If the stock sees a strong follow through price action, say over the next 2-3 days, and say crosses back about that 440 levels, 440, 450 levels, then I believe you can look at even target potential of the stock hitting back about those 500 levels. So would suggest a hold, but watch about those next couple of days. If the stock sees a strong follow through price action, you should definitely look to hold on and look out for 500 as a target.
All right, I believe multiple people have asked about this. One of them is Manohar, and we've got Syed also asking about this. This one's for you, Vijay. And the counter is Devyani International. It's a counter that I think a lot of people got into at IPO level. It hasn't really lived up to the expectations. What would you suggest that people should do, people who are holding on to this stock? Should you continue to hold, or should you exit and move to something else that would be more lucrative?
I think that there are a lot more, as I mentioned earlier, a lot more companies which are trading at a lower valuation. Rather than being in higher valuation and stressed valuation companies, let's try and be safe, because markets are trading at highs, and any kind of a correction, meaningful correction, maybe 1,500 points on Nifty, can bring these companies down considerably and erode capital. So I would say that get out and get into low price to earning companies. There are several available. Even if you buy a Tata Steel at this level, I won't say no to that. Or Jindal Steel and Power, JSPL, which is trading at a very low valuation, or a Nalco, or as we have discussed already, Hindustan Copper, or a Tata BSL. So these companies offer a great potential, far greater potential in the coming months rather than the stressed valuation companies. Although Devyani is a great company, it's into retail space, but yes, the entire COVID impact has literally had a big toll on the restaurant business. So it would take time. And Devyani is a great company, but again, buy it. If I would have chosen to buy Devyani, I would have bought it around 70, 80. So I would wait for a correction to get into the stock. Meanwhile, there are other opportunities which are safer.
Okay, this one is from Sunil from Noida. He's saying that he's bought 200 shares of Maharashtra Seamless at about 467 rupees per share. He's saying time is not an issue, but what should he do? Vijay, Maharashtra Seamless, do you track this counter? What should Sunil do? He's saying that the time is not an issue for him.
Well, it's a good company, and we have to understand, if we are invested into good companies, we have to give time. So, any company which rises up very fast, it comes down in the same way. So I would say that this is a stable company. It has consolidated a lot, although it is trading at about 317, 18 right now. I think that the stock can go up to 400. So just show some patience. It's a good company, and it is very promising, and 400 is my target for Maharashtra Seamless.
Is from Arun rather. He wants to know about Manappuram Finance. He's bought about 500 shares at about 168 rupees per share a month ago. He wants to know how does the chart for Manappuram Finance look like. What's your take, Kunal? Manappuram Finance, does it make sense for Arun to stay put in this counter? He's bought about 500 shares at 168 rupees per share.
Well, I would suggest that look out for the stock closer to your cost price or just above your cost price as a good level where you can look to exit. What has changed for Manappuram Finance was the sell-off which the stock had seen in the first week of August, where the stock fell very, very sharply from 210 to almost 170 or sub 170 in a matter of the next 3-4 days post that sell-off. So I think the stock price and the trends have changed. you've seen the change of forces. So from being a stock which was earlier a buy on dips, it's now becoming a sell on rallies kind of a stock. And I believe you should look out for avoiding such contrarian trades, even though the stock has corrected, because the nature of price volume forces have changed dramatically for Manappuram Finance. So purely on that aspect, I would suggest that you should look out to exit either closer to your cost or slightly above it.
Whirlpool of India is the next counter. Kastub wants to know what the charts are looking at like for the long term.
Alex, can you repeat the stock name?
Whirlpool of India is the counter. I believe it's seeing quite a bit of an uptick in today's session. In fact, quite a sharp uptick in the very near term. What are the long-term charts looking like though?
It looks attractive. In fact, Whirlpool, I think if I'm not wrong, has also come back above its 200-day moving average in this last 7-8 days of price recovery. So looks attractive. Long-term charts are very, very strong. We've seen the stock giving you almost more than 10x or 13x returns in the past 5-6 years from 2015 lows, 2014 or 15 lows. So I think in that sense it has a very good history over that kind of a time span. So I believe with the stock making a comeback again should be a good level for you to enter the stock, specifically if you're a long-term investor.
All right, with that we come to the rapid fire segment of the show where we will ask you queries and very short answers, buy, sell, hold, avoid, and if you want rational but very, very short. Let's get on with this one. This one is from Ritu. She's holding Kerala Healthcare, 30 shares at 653 rupees per share. Wants to know whether she should book losses or hold on to it. What's your take, Kunal?
Average at current levels, 520 seems to be a good support for Kerala.
Kunal, First Source Solutions is the counter. We've got Aditya who's asking whether it can be bought from the perspective of 6 to 8 months and if you can give a target.
I would suggest to buy at current levels, but I would suggest to increase your time horizon from 6 to 8 months to at least 2 to 3 years, if not more.
This one is from Kunal Thakur from Mumbai, saying that he has 15,000 shares of Vodafone Idea, wants to know whether he should hold on to this particular counter until the Wednesday cabinet meeting. What's your take on this one, Vijay? Makes sense to continue to hold on to Vodafone Idea?
Should have a stop loss of 7 rupees and keep on holding, because there must be something in store, because government is trying to bring out something positive. Keep on holding with the stop loss itself.
Vijay, what about Ultratech Cement? Nino wants to know what the ideal buy price is for the long term. Would you say it is now or would you wait for a correction?
Well, I think it is because it has run up considerably. I think if somebody gets same stock around 6,800, about 1,000 rupees lower from here, so it would be a good price. 65 to 6,800 would be a good entry price.
This one is from Surya Narayanan from Bangalore. Tata Steel, about 1,000 shares, bought at 1,410 rupees per share. Hold or sell? What's your take, Kunal?
I would suggest a hold on current levels and keep a trading stop loss closer to 1430 if it's a very short-term oriented trade.
Vijay, Federal Mogul Goats is the counter. Mayank wants to know, he's holding at levels of 300. Can he add more at the current level for the next 2 to 3 years?
Well, it is one of a good auto ancillary company, and presently trading at a PE price to earning about 32. I would say that you should exit and look for lower PE companies.
And all right, with that we come to the end of the rapid fire and the query segment altogether. Thank you, Kunal, as well as Vijay, for joining us on the show, talking about JSW Energy, resolving our viewer queries as well. On that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, lots lined up for you after this break, so don't go anywhere.